Hey everybody, Brian here from quantlabs.net. Today I'm going to talk to you about VIX, day trading, and what I'm planning to do about it. As part of automated trading, I like to have self-adapting systems. One of the key components is the ability for a system to go into day trading for short-term profits. Basically, what I mean by that is everyone seems to be a day trader all the time. From what I learned from talking to people, be it retail traders, automated traders, it seems that retail traders, at best, that day trade, break even. Over the long run, they're not really profiting all that well. Maybe they are, maybe I could be wrong, I don't know, but the perception I'm getting is day trading works, but only on a short-term basis under certain conditions. One of those conditions is the VIX. When fear is kicking in, day trading can be pretty nice. So all the process I've shown up until now for this system I'm building out is pretty well also used for day trading. It's just with the day trading, it's done more aggressively, and it's done with short-term positions, namely a few days. So one of the key indicators you use, obviously, is the VIX for volatility, just to see what will kick off a system to go into a day trading mode. So what I'd like to show you is all my C# and .NET and Visual Studio. It's a very simple program. Let me just run it for you. So what am I going to do? Okay, so what it's going to do, here's the VIX. Currently it's at 14.49. I do a little difference there, and it just goes into the day trading mode. I'll show you what I mean. So it checks the VIX every 2 seconds using Yahoo Finance. Now, I would never recommend doing it as frequent because your requests out to Yahoo Finance servers are very limited, and you'd easily exceed that. I think if you're doing it every 10 minutes, 15 minutes, an hour should be fine. But you don't want to do it at the end of the day, because as, let's say, the markets open up, the VIX, let's say at 12 or 1 o'clock kicks in, and by the end of the day the VIX settles down at the end of the day, well, you just lost your opportunity to day trade. So in essence, that's why I want to keep a very tight parameter on how often I'll check that VIX metric. Anyways, here's the source code. Again, I'm not going to release this code, but it's pretty simple. And as I said, it's C#. So basically what we're doing is we're going to set up a web client so you can download from Yahoo. I'll show you that in a minute. I also set up a first download flag, a boolean. I also want to know what my very first VIX metric will be. So obviously these are all doubles. And what we do is we download the VIX with this method here. And as I said, in the class here, you'll get the double for the start VIX, and also the flag if it's the first download. Now this is what it basically does. So it opens up the web client class, or sets up the object for it, sets up the temporary VIX as a double, and it does some downloading, some exception handlings thrown in there. It downloads the VIX from the Yahoo servers. The symbols is this, the little hat VIX with a field of L1, which tells Yahoo to request the last date, or sorry, the last close. You can get that from the Jarlu. I've put up on my blog. I'll try to remember to put it in there so you know what the codes to use with Yahoo Finance. So of course it'll return a string. We convert it into a double, and display some stuff, and then return the VIX. So in the guts of it, once it downloads the VIX, all it's doing is checks the flag. Is it the first download? Yeah, okay. Then your starting VIX will be the current VIX. and then the first download flag gets set back to false. It's only done once. Then it calculates that difference, and basically what it's doing is calculating the percentage of the VIX, the current VIX against the starting VIX of the day. We don't really need that just for display purposes. This would change obviously, but I'm just displaying it for demonstration purposes. So you can see the day trade. The intention here is once it does go into day trading mode, it will run some sort of process within the DOS command. So when you load a MATLAB script to run or who knows what, but you have that capability to kick off the day trading mode. Now the difference here, this is the threshold we need to worry about. Oh, and at the end of it, you just sleep for how long you want. Like I said, in this case, it's 2 seconds. If it's going to be every 5 seconds, 60 seconds, or whatever. Yeah, so this threshold here is where it gets interesting. So you have your difference. So I set the difference of intraday rate of if the VIX changes 5%, 10%, does that kick off and trigger the system to go into day trading mode? If you have a comment, let me know. Typically, if you're doing it for end of day, if there is the VIX jumps or spikes by, let's say, 25%, that's a pretty good classic metric that you could use. But for intraday, I'm looking at probably, as I said, 5 or 10% to trigger it. Let me know. I'd be interested to know what you think the metric should be. All right, talk to you later.